So the next up is what we call a bullish markup bar. So this is actually a more straightforward kind of formation. And this can be either this or this or this, right? Basically, you want to see that the bullish body is 2/3 of the bar range. You will see that in mostly in the chart, especially when the market is going in the uptrend, right? At the uptrend. But we're not going to just do it when it forms, like I mentioned. We're going to do it only when there's a structure at the key levels. So you want to see a body that's 2/3 of the bar range. So it could be a bar that basically has no tail as well. Can be fully just a bullish body as well. That also can. With tail or no tail, not very significant. The most important is that to take note is that, okay, with tail or no tail is actually not important because it's just a minimum kind of forced selling, a fixed selling bar because of the small tail, right? But it's not as significant as a bullish pin bar. But what's the significance of a bullish market bar is that because it's a 2/3 bar bullish bar body, we say that this has commitment. The significance is that this has a bullish, this is a bullish commitment, right? It's like the market maker is ready to go. It's a bullish commitment. It's ready. They do a big bullish commitment bar at the key levels. We say that they are bullish. Okay. Okay. So over here we're going to look at the various markup bar that forms in the chart, and you can actually pause the video, and before I go into show you which one are the bullish markup bar. Okay. So let's say now you have really do practice identifying, and now let me just go into my blue color and identify them for you as well. Okay, so this is the one, this is the one, this is considered the one, this 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 one, this, 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 this. So you can see there's actually a lot of markup bar, right? There's a lot of markup bar that fulfills the condition. Okay, so just okay. So again, I know there's a lot of markup bar here, right? On how to use them, again, I will cover that when we go through the strategy structure. Okay, first identify them first over here. Okay. So this is actually a variation, an extension of a bullish markup bar. So this is what we call a flush up bars, okay, as a bullish markup bar. So the criteria for a flush up bar is actually the same as a markup bar, right? It fulfills the markup bar criteria. There's at least 2/3 bar range. Again, no need to use ruler. You must visually see that the body is at least 2/3 of the entire bar range. The difference is that for a flush up bar, you want to see that the bar range is larger, right, than the preceding bars. So what do you mean by larger relative to the preceding bars? So this is, we do not have an exact how many multiples and things like that, but usually it's at least 1.5 times of the average range. Usually it's at least 1.5 times. We call it average true range of the bars, average range of the bar, at least 1.5 times. But visually, a good gauge is that you want to see that the bar range is what we call outstanding. Okay, it's very outstanding. And when in doubt whether it's outstanding, it's usually not outstanding. Agree? Right? If you don't see the bar being very big and outstanding, it's usually not outstanding. Okay? And to us, when we see a flush up bar, to us as price action trader is that this is the formation of flush up bar is bearish to us. Okay? And if you are long, it's the right thing to do to actually take some profits off the table whenever you see a flush up bar formation. So this is what I like to do when I'm actually trading cryptocurrency or even stocks. When I see the price start to become a flush up bar, okay, and usually at least 2 flush up bar, I will look to take some profits off the table. I will do this thing called a size out. So what do you mean by size out? Size out, S-I-Z-E-O-U-T, size out. Size out means that you reduce your position. You can look to reduce your position by 40 to 60%. Okay, right? So let's say you got 1,000 shares. You got 1,000 shares. You will, if you're long, your 1,000 shares, you see the market flush up, right? You may look to actually exit 400 shares up to 600 shares, because if you exit take the size of less than 40%, let's say take 10 or 20%, it doesn't make sense, right? So what for you size off, take your risk off position when you're only taking 10 or 20%, right? Same thing that if you are taking your size off by let's say 80-90%, right? You might as well take the whole thing, right? Because the remainder of the position basically doesn't make any sense anymore, right? In terms of the P&L. Okay, so that's what we mean by when I use the word size out, means you take a position off by 40 to 60%. Okay, so flush up bar, understand that is a continuing extension of a markup bullish markup bar, and its formation is bearish to a trader. A markup bar is bullish to a trader. A flush up bar is bearish to a trader. Okay, and especially when this happens at certain key levels, right? It is mainly used by market makers to trigger stop loss. Okay, and this you will actually uh, learn more in details when we go and cover the strategy structure. We call it a flush up to take out the stop loss. Okay, usually done by flush up bars. And usually the reason also why we size out is because this actually creates, when a market flush up, who do you think that are the ones who will chase the stock price? Right, retailers will see that the price becomes more and more obvious, right? A flush up is basically a very more obvious version of a bullish markup bar. And this usually causes retailers to chase the market. And there's a strong incentive that when a lot of retailers are chasing and pushing the price up, the market maker will use this to actually unload onto the retailers, and hence is bearish to us as professional traders. When retailers are buying, professional traders like us will be selling alongside the market makers. So let's take a look at the chart over here. It can happen again in any time frame. I know this is a 50 minutes chart. You can actually see it happening in even the 30 minutes, 4 hours chart, daily chart, and even the weekly charts. When whichever time frame it forms, in that particular time frame, it is bearish. Okay, so you can see that this bar is definitely outstanding, right? The range is very wide. The bar range preceding it is very much smaller. This is definitely outstanding. This is definitely outstanding. This is definitely outstanding. And usually based on my trading experience, whenever I see that the bar becomes outstanding, green, a flush up bar, right? It doesn't mean that the market will come down 100% come down, but we say that in trading language, the probability of the market continue to go up becomes lesser. And of course, coming down is much higher. The chance of it coming down is much higher whenever there is a flush up bar formation. Okay, and of course, if you are long, like I mentioned, it's a good attempt, it's a good trade to actually take some position off. Okay, as you can see that every time the flush up bar forms, the market either goes sideways or comes back down. Okay, all right, let's move on to this thing called the bearish markdown bar, which is the opposite of the bullish markup bar. Okay, so the bearish markdown bar, you want to see that the bar body again is 2/3 bearish bar body, 2/3 of the bar range. So it can be either this or this or this. Okay, so with tail or no tail doesn't matter, because the tail is going to be very small. But again, this is something that I would like to share with you. The significance is that you see a very strong commitment. Okay, we call this a bearish commitment. We say there is a very strong bearish commitment in terms of price action, because the bearish body is at least 2/3. It can be a bar that's entirely red without any tail as well. Okay, so learn to identify it over here. You can actually again pause the video and identify it in the chart over here, or the bearish markdown bar. So let's say now you have already identified, and I'm just going to use use blue to mark it out. Sorry, to mark it out. So it can be this markdown bar, this, this, this one. So again, no need to use ruler, just visually identify. Okay, visually identify them. Train yourself to visually identify them so that doesn't make sense for a trader to use a ruler to measure the bar, right? So this is the ones. Like I mentioned, if you're in doubt whether it's a markdown bar, usually it's not. Okay, so you must really clearly see that the bar body, the bearish bar body, is at least 2/3 of the bar range. Okay, so the extension of a bearish markdown bar is what we call a bearish flush down bar. Okay, again, it fulfills the bearish markdown bar criteria. The range of the bar is larger, so the difference is that it's a bigger range. Again, usually at least 1.5 times of the average range of the preceding bars in the chart, depending on which time frame that you're looking at. And this, when you see a flush down bar, right, like what you see in the current market right now, right, when the market is crashing, market is coming down, this actually causes a lot of traders to actually cut their position or chase to go short, right, or induce what we call a panic selling, right? Because you see a large range rate bar, like what the Dow Jones is actually doing right now. A lot of traders panic because it's making such a big down move in a single bar, right? So it causes a lot of traders to let go of their positions. Like I can see over here, right? You see the bar become wider and wider, and at the key levels here, this flush down bar actually reverses the market. It's counterintuitive, right? The point where a lot of traders cut their positions, turn short, and give up in trading is the moment where the market turn. Okay, so that's the significance really, or the significance of the flush down bar. Okay, so I'll just go back to using blue. And of course, we use that at certain levels, right? Like in the S&P chart that I just shared with you. If you see this kind of flush down bar at the key LP levels, is usually used to trigger sell stop orders that are placed by traders. They are placed by traders who have been long for many years, right? In the higher time in the time frame that you're looking at. Sorry. At certain key levels. Of course, we will go into the structure again in the subsequent videos on the structures of the strategy. And the formation of flush down bar is bullish to a professional traders. Like I mentioned, right, a flush down bar, a bearish markdown bar is bearish. A flush down bar with a larger range, outstanding range, is bullish. Actually, is counterintuitive, right? Contrarian is bullish to a trader. And if you have, let's say for example, shorted the market, okay, it's the right thing to do to again size out your position or take some profits off the table or look to go long, like what I did, right? When the market actually crashed because of the virus risk that happens recently. And of course, like I mentioned, it can happen in any time frame. And when you see that happen in any time frame, right, this kind of outstanding red bar is bullish to a trader. Okay, and you do see that there are tails like this, right? So this was actually a big red bar and becomes trade back all the way back up. That's why you see a big tail over here. Okay, so this was a big green bar and it trade back all the way back down. So outstanding bars, there are times when it's forming, right, is also considered a flush up bar. Outstanding bar when you're still forming a flush down bar is also considered a bullish signal. Okay, so when you see this kind of formation, a larger flush down bar, it is bullish to a trader, right? It's not the time to go short because it's the most obvious or most obvious downside price move, which is bullish to a trader. And actually, this is actually considered a key LP level, right? This flush down was very deliberate to take out all the stop loss that's congregated here at the LP levels, right? Swing low level, before the market reverses back up. Okay, this is actually your later on where you will learn this thing called the DR1 structure.